Hello everyone, and welcome to this educational presentation of what is the one question a trader should never ask. Now, I know this may seem like a funny question to present to you, but it's actually a question that most traders ask per every trade. Now, if you're wondering what it is, let's look at some examples what it could be. A lot of traders and students of mine ask before they enter into a trade or when they're trying to figure out what a trade should be, what are the earnings estimates? After all, you need to know perhaps if some announcement's going to be coming out, or maybe it's not that good, or maybe the quarter didn't finish out that well. So you want to know what the earnings estimates are. So that's a very prominent question. Another question that traders ask is, what are the jobless claims? You're looking at what's going on fundamentally within the country and what's going on economically. So that will help in determining a lot of what your decision process may be. Now, these are more fundamental questions that you may ask. What about if you're a technician? What if you just like to look at charts? Well, what if you ask yourself, is the market overbought? Okay, is that the one question you should never ask yourself? Or conversely, is the market oversold? Well, these are all viable questions, and we will explore this, but I will be sharing with you out of these questions and possibly some more, what is the number one question as a trader you should never ask? And I'll be doing it with the help of using our new platform. This is the PTS Primo charting platform. I designed this with Pro Trader Strategies, and we strongly feel it is the educational portal that teaches traders how to trade the markets. So we really are strongly influenced with teaching you so that you can ultimately make your own decisions. So this promises to be a great presentation. We're going to answer that question. And welcome once again. My name is Steven Primo, President and Founder of Specialist Trading. I teamed up with Pro Trader Strategies about 8 or 9 years ago, and we formulated our educational company where all we do is educate and mentor our students around the world in over 115 countries and in virtually every state in the United States, so that ultimately you can find out what the questions are that you should be asking and the ones that you shouldn't. It's our belief that the reason why most traders fail, estimates of upwards of 80 to 85%, is because you're basically taking yourself out of the game. You're relying on someone or something else to tell you how to trade. I've been trading for 41 years, and if there's one thing I've learned in my 41 years, that's really a recipe for disaster. You should be in charge of your own trading destiny, and the only way to do that is by being supplied with fundamental teaching and mentoring and just education that has stood the test of time. So this is what we do at Specialist Trading Pro Trader Strategies. We provide you with that fundamental education so that you can make your own trading decisions. And today is going to be a perfect example of that. We're going to give you a great presentation and share with you a lot of education that you can start using as early as today once we've concluded. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results in today's presentation. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And please remember that all examples are strictly for educational purposes only. As you're taking a brief moment to view our disclaimer, once again, I invite each and every one of you to follow us on Twitter. There's our handle right there. You may want to copy that down. I post different information on a daily basis, anywhere from signals that our strategies have generated to little bits of financial wisdom along the way. So lots of great information. Feel free to follow us on a daily basis on Twitter. Okay, so as I stated in the very beginning, we are all about educating you. That is our philosophy. That's what we feel will really make you a consistent trader. In fact, it's my belief that that's the only thing that makes you a consistent trader, sound fundamental education. So as you can see here, my goal is not to trade for you. My goal is not to force feed you signals and tell you what the perfect market or time frame is. My goal is simply to teach you so that you can make those decisions for yourself. This is the same way I was taught some 41 years ago. This is the specialist edge that I believe is the cornerstone for sustaining me for 4 decades, and hopefully it will be able to do the same for you. Now, this promises to be a great presentation, but I want to take all of your questions just like a classroom. But if you kindly wait till the very end of today's class, that way we won't have to be here for a good 2 or 3 hours. We can wait for every slide to conclude, and then we'll answer any question you may have. So if you happen to join us late, please wait till the end of class to ask any questions. The only question I will answer is this being recorded? Yes, it is. So if you have to leave early or if you're having technical difficulties, we will send you and provide you with a link to this recording, okay? So please, if you have questions, let's wait till the end, and I'll promise to go through each and every one of them. All right, let us begin. So what is the number one question you should never ask? Remember, we went through that series of 4 questions about fundamental news, about economic reports, earnings, technical overbought or oversold. But what is the one question you should never ask as a trader? Have you guessed it yet? Well, here it is. What do I do now? All right. I know a lot of you are saying, well, I never ask myself that. Okay, I guess I don't fall into that group that it does. But believe it or not, the majority of traders, I would estimate upwards of 80 to 90% of all traders ask themselves every day, what do I do now? Now, even though you may not say that, I'm sure you're sitting here saying, I've never said that. In fact, I never say that to myself, what do I do now? Even though you may not utter those words or say that exactly to yourself or think that, every time you go to a chat room, every time you go to a trading room, every time you watch TV or watch some economic report to find out what the earnings are, what you should do, to listen to what some trading guru is saying on TV, to listen to what someone is saying in a chat room or a trading room, you are basically telling the markets, I don't know what to do. So you tell me, what do I do now? That's where you're going for your source of information. When you go to a chat room, when you go to a signal service, pay for signal service, when you read a blog, when you listen to some guy on TV, even when you go to a webinar, okay? Now, I'm sure you're saying, well, that's not really what I do, Steve. I go there for information. Basically, yes, you're going there for information, but ultimately the bottom line is tell me something that I may want to do because I don't know what to do. And that, once again, is a recipe for disaster. You should never get to that point where you're relying on someone or something else to tell you what to do. Our entire industry is based on that feature. I mean, think of it. You know, come take this, buy this $10,000 system that will generate up and down signals. You won't have to do anything. Or come to this nightly chat room or blog, and I'll tell you exactly what to buy or sell for tomorrow. Or listen to the guys on TV, and they know what to buy, they know what to sell. They're more, experienced than I am. So the industry is based on you listening to so-called experts or so-called magnificent systems that will never fail you, that will tell you what to do, and you'll make lots of money. And if that were true, if that were working so well, then why is it estimated that upwards of 80–85% of traders fail? It's because they don't work. These things don't work. And not because these people or chat rooms or blogs or systems don't have good ideas, but there's a fault in when you take yourself out of the game. When you are not a part of the process, no matter how good a system is, no matter how good somebody is forecasting something or some economic indicators, if you cannot be a part of the process, you're basically telling the markets, what do I do now? I don't know what to do. It would be similar to an airline pilot flying up in the air with a ton of passengers and then looking to a co-pilot and saying, what do I do now? How do I land? You have to be a part of the process. You know, a brain surgeon doesn't, in the middle of an operation, say, well, what do I do now? What do you guys think? He knows what to do prior to the operation. Same thing with an airline pilot. Same thing with a lawyer. Everyone knows what their job is prior to the actual implementation of that. But for some reason, traders do the opposite. They kind of go in halfway thinking, well, I'll listen to this guy and I'll kind of figure it out along the way. Well, no other profession does this other than traders, and that's why the majority of traders fail. Here's the good news. Pro Trader Strategies and myself designed specialist trading to supply you and provide you with this information so that you wouldn't have to rely on someone or something else, so that you could be in charge of your own trading destiny. All right, so here's how we're going to solve this today. There are only 4 questions that you should ever ask. Only 4. And you can do this on a daily basis prior to each and every trade. So let's go through the 4. The number 1 question is, am I on the right side of the market? I don't care what someone says, some stock is going straight up or some future is going straight down. Ask yourself, am I on the right side of the market? Let's look at this example right here in Adobe. All right, let's say that you've done your research or maybe some method that you devised on your own, but you like this stock. But you're not sure. You say, okay, well, I've got to ask myself, I forget about going to the chat room, forget about waiting for the earnings. All right, how do I know if I'm on the right side of the market? For after all, this stock has been going up, then it's going down. It's kind of in a range. So I don't even know what they mean by being on the right side of the market. But even after that, I want to buy this. According to my method and my technique, I should be buying this. And let's say you want to buy this right here on this bar. Okay, well, here is the simplest and most powerful way to know if you're on the right side of the market. You just add the 50 period moving average and then ask yourself, where is price in relation to that? If price is below, then you should only be a seller. That's your bias, all right? That's being on the right side of the market to the downside. But if the majority price bars are closing above that 50-period moving average, which they are in this example, then you should be a buyer. It's that simple. Then you're on the right side of the market with this example. So if you're thinking about buying, I don't care what strategy it is, what method, what technique, and it's above the 50, guess what? You're on the right side of the market. So that's half the battle right there. I mean, think of it. When you have a losing trade, when you buy something and it goes straight down, I'm sure that's happened to a lot of you, it's happened to most of us. The minute you get in, it's almost as if the market was waiting for you to get in and it goes straight down. Basically, it's because you're on the wrong side of the market. The market was telling you it wanted to go lower and you were basically fighting that or swimming upstream. Or let's say you sell something and the minute you sell it, it goes straight up. It's most likely you are on the wrong side of the market. Those things have less tendency to take place when you're on the right side. So this is half the battle. You've already increased your odds for consistency by being on the right side of the market, by answering the number one question. Now this leads us to the number 2 question. Where do I place my initial stop? Now most traders will look at this the second time around. They'll think, well, I want to know where do I get out with a profit first, or where do I enter and then where do I move my stop up, or where do I place my initial stop? I usually don't think of that till the end. But this is the most important thing because it's going to determine a lot of other different levels of your trading. For example, once again, we wanted to buy here, which happens to be 224.50 in Adobe, okay? Now in our courses and strategies, we have multiple different levels for placing your initial stop. If you're a conservative trader, if you're an aggressive trader, if you have a big account, you have a small account, we show you different ways that you can choose from to pick your stop. Remember, we're just an educator. We're providing you with the tools. It's up to you to decide. One of the most standard and basic of all stop placements, if you're buying, is just simply to place your stop below the lowest short-term low, which would be right there, okay? We created a low here and then we bounced up. So let's say we just use that basic fundamental place for placing your stop, which is down here, okay? So that's where we're going to place our stop. Why are we asking where our initial stop would be? Because we want to know how much we're willing to risk. In this case, it would be 11.25 points. Now that you've determined what your stop is and you determined it's 11.25 points you would be losing if you were wrong, now you can determine, well, do I really want to take this trade? I'm not willing to risk 11.25 points. It's a little bit too rich for my blood. Or maybe you're saying, my account size is not large enough. Or maybe you're saying my account size is large enough, but I can't purchase as much, so you have to cut down your amount of shares. Or maybe you'll say, well, 11.25 points, I can decide and trade options. Maybe I'll buy calls, or maybe I'll put together some type of spread with an upward bias. So you see how already, just by determining your stop and determining how much you're willing to risk will determine how you're going to enter into that trade, okay? Or if you're not going to enter at all. So it's extremely important where to place your initial stop. Now we go to question number 3. What is my profit target? A lot of students say, well, Steve, I just kind of know, I get a feel, I watch it, and I feel when the markets run out of gas, then I exit, or I feel like when, I just feel like this is a good enough profit for me, I'll get out of the trade, okay? This is the way most traders trade, but we need a little bit more structure than that. That's why question number 2 was so important, where we place our stop, because that's going to determine where we exit. Let me explain. All right, let's say we decided to take this trade, whether we're trading a call option or whether we're actually buying the stock. Maybe we purchased 10 or 20 shares, makes no difference. Now, we're willing to risk 11.25 points. So in order to have some type of consistency, you want to make at least twice of what you're willing to risk. Because over time, if you have a couple of losing trades every once in a while, well, it'll only take one trade to make back what you lost and you're back to even. Okay, and if you have a series of winners, then you'll have that much more in your account. So if we're willing to risk 11.25 points, we should make double that, which comes out to 22.5. So all you want to do is simply double that risk exposure and add it to where you entered, and that will give you your exit point. It's that simple, because no one knows how high something's going to go. We never know, even though someone could say, this is where you should exit. I can't tell you on a daily basis how many emails I get from people telling me, where should this go? Or how high will this go? No one knows. I mean, I've had trades where I've had tremendous profits and they continue to go higher and higher, all right? And I've had trades where they never get to where I thought they were going to go. So we never have an idea. I mean, we never have a clear-cut, idea of where they'll go. We have, places in which we can exit in order to give us some sound fundamental trading education involved. For this example, we're going to be exiting at 247 because that is twice our risk exposure. It's that simple. Now we go to question number 4. How do I protect my profits? How many times have you been in a trade? Things are going great. You're thinking, boy, this is going to be a great trade. I should be exiting within a day or two with a nice profit. It's going to get it to my point. And then some news comes out, something happens, or the market just changes the conditions, and your winning trade now turns into a loss, okay? That's extremely frustrating, probably the worst feeling you could have. Most traders, myself included, would rather know we lose right off the bat and our stop is initiated as opposed to being in a winning trade and feeling as if we've got a profit pretty soon and then it turning into a losing trade. So we have to protect our profits so that we never get to that point, okay? So how do we do that? Well, remember, we wanted to buy at 224. We have our stop in place. We're risking 11.25 points, and we want to exit at 247. This is what's called a fixed exit because our exit point is already predetermined. It's fixed. We have an order in there. So once you know where your fixed exit point will be, all you have to do is determine from your entry point to that exit point, what is the 50% level? In other words, when we travel half that distance, what that will be, which is at this point right here. And we call this our 50% rule. What this means is that once price reaches that 50% rule, you should either exit a portion of your position and move the remaining portion up to unchanged, the stop placement, or if you don't want to exit at all, at least move your entire stop up to unchanged, 224.50. This way you've protected your profit because you would hate for a price to get up to the 50% level and then come straight down and you're thinking, boy, I had a nice profit of about 11 points and it turned into a loss. So as we see here, if we just watch the trade unfold, we see that we're going higher and then ultimately we cross the 50th threshold. And so what does that tell us? Well, once again, if you have more than one lot, you could exit half of it. Regardless, maybe you had 2 calls, you could sell one and you could move your stop or just have a mental stop knowing that once we get back down to 224, if we do, we're going to exit. Or if you don't have enough to sell a portion of your position, then you simply take your stop right here and move it up to unchanged. So this means if price all of a sudden starts to come down, you're not going to have a winning trade turn into a losing trade. You're just going to break even. I know it hurts, but still, breaking even assures you that you will come back to trade another day. Most traders don't do this. What happens is they watch it slip into a negative trade, and then what turned out to be a nice quick trade that was going to last maybe a couple of weeks or a month turns into a long-term position. Now you're hoping and praying that this thing will ultimately turn around. Okay, so let's watch the trade now because the only thing left to do is watch the trade unfold. We have an order, an open order to sell at 247. We've moved our stop up to unchanged to 244.50, I believe. And so if you're trading correctly, which is what we're presenting in this structure, it's very boring. It's almost like fishing. You just sit back and watch, okay? You just sit there, you cast your line, and you sit back and watch. My mentor said if you're trading correctly, you shouldn't be in front of 3 or 4 computer screens. You shouldn't have 12 phones ringing. You shouldn't have 2 TVs blasting. It should be very quiet and very boring because everything's in place and now it's just left up to the market to decide and you just sit back and watch and monitor. So as we're monitoring this, remember our exit orders in place, our stop orders in place, and we just sit back and watch. Even though there may be some downward days, that's okay. We're either going to get stopped out with a loss, or I should say a break-even point loss, or we're going to exit with a profit. So ultimately, as we can see, we traded there at 247 and exited with a 22.5 point gain, okay? This is not based on anyone telling us what the stock was going to do. It's not based on anyone in the chat room. It wasn't based on any economic indicators, and it wasn't based on any fundamental news such as earnings reports. It was simply coming from you. If you like this stock and you're on the right side, apply some type of structure and you'll have consistency in your trading. Let's look at another example, okay? Let's look at FSLR. All right, this is coming into June, this last month here, and we can see that, well, the stock has been coming down lower. According to your plan, your strategy that works so well in Adobe, you want to use the same thing and go long again. You like this stock. This is generating a buy signal according to whatever method or structure you have. All right. Now, let's say you're a technician. All right. Well, you're looking at this stock and we broke a short-term downtrend. That's a good sign, right? And then if you go back a little bit, we have a kind of a short-term support level here. So you want to buy. So normally you would jump in. But remember, you have to ask yourself those 4 questions. What's the first question? Am I on the right side of the market? You just can't jump in with both feet and think it's going to work out. This is why most traders fail. You need something that's going to add to your consistency, that's going to put the odds in your favor. Not going to guarantee that every trade will be a winner, but at least put the odds in your favor. So how do we do that? We apply the 50-period moving average and ask ourselves, where is price in relation to that? Remember, if we are above the 50, then it's okay to buy. If we are below the 50, never buy. You only want to be a seller. So let's apply the 50-period moving average and we ask ourselves, where is price? Price is below. So automatically, what is the market? Not some guy in a chat room, not some guy on TV, not some earnings report. What is the market telling us? It's telling us that we should not be buying. We are on the wrong side. Okay, so we're not going to buy. And a couple of days later, you would have thanked yourself for following this rule because you either would have been stopped out or holding on to a loss and wondering if you're doing the right thing. Okay, so we're not a buyer and we knew we weren't going to be a buyer. Let's say ever since this point we started to get negative and we started using the same strategy looking for sell setups, and let's say one was generated right here. After all, we're on the right side of the market, so we want to go short. All right, we're on the right side of the market. Let's see how this works. Let's go to question number 2. Where do I place my initial stop? Once again, we have upwards of 4 different initial stop placements to apply depending on what type of trader you are, and it's totally your decision. But let's use one of the most standard and basic. This would be the last short-term high, which would be up here, okay? So this is where you'd place your stop. If we traded above there, that's where you know you're wrong. That's where you should be getting out of the trade. All right, we go to question number 3 then. What is my profit target? Where am I going to get out with a profit? After all, I know where I'm getting out if I lose. If I entered at 67.55 and my stop placement is up here, I'm willing to risk 8.20 points. Okay, now I have to decide, is that okay with me risking 8.20 points? Will I be able to sleep at night if I take that loss? If I can't, then don't take the trade. All right, use another one of our stop levels and maybe it will work out for you. But if this is the stop level you want to use, don't take the trade. But if it does fit in with your parameters, your risk parameters, if it does fit in with your capital requirements, then go ahead. You can go short. You can perhaps buy a put, maybe some spread strategy to the downside, or if you have enough capital, you'll actually go short the stop. Okay? All right, so we know how much we're willing to risk. This determines how much we're willing to make. If we're risking this point, 8.20, we simply want to double that to the downside because we want to make twice the amount of risk, which would come out to 16.40 points. This means that we would enter at 67.55 and exit at 51.15. That's it. It's that simple. So we place an open order to place our stop here. We place an open order to buy here, and we enter into the trade. Now, what's the last thing we do? Question number 4. How do I protect my profits? What if things start going my direction? How do I protect myself so it doesn't turn into a loss? Once again, since this is a fixed exit, since we know that this is where we're getting out, we're going to cover our position, we want to determine what is the halfway point. Well, that's right here, the 50% rule, meaning that once we get there, you can either exit a portion of your position or at least move the stop all the way to unchanged. So let's see how the trade unfolded. Well, it's going in our direction, 2 days, and in 3 days, we're already at the 50% level. So this is working out very nicely. Now, we don't want to see this trade all of a sudden turn around and stop us out. So the first thing we can do is exit a portion of our short position, or at the very least, move this stop to unchanged down here. Whether it is a mental stop or an actual physical stop, we know that once we get back to this point, we're out of the trade. Because it's no longer right to be in this trade. Okay, so now what's left? Well, the only thing left to do is watch the trade unfold. Remember, this is what it means to apply structure to your trading. It's very simple, it's very basic, it's almost boring, but this is what it means to trade correctly. This is how you become a consistent trader. not by trading by the seat of your pants or by once again saying, what do I do? I guess I'll go to this chat room to find out what they like to buy today, or I guess I'll listen to the guys on TV to see what they think of this stock. That's, once again, that is a way of saying, I have no idea what to do. Why don't you guys tell me, what do I do? This way, you are in charge of your own trading. For the very first time, you're making your own decisions. Now, just sit back and watch the trade unfold. Well, as you can see, it starts to go in our direction, and in another 3 or 4 days, we exit with 16.40 points. That's simple. Now, is every trade going to be a winner? No. We're just trying to show you some structure to add some consistency to your trading so that you don't have to ever ask yourself, what do I do now? All right, now so far we've added structure, but what if you feel like, well, Steve, I don't mind using this 2-to-1 risk-reward ratio, but sometimes these trades just keep on going. And even if I made a couple of points or so, it will just continue and continue and continue. So how do we increase our odds? Well, we increase our odds by adding the PET-D. You've heard me speak about this before. This was another tool I was introduced to some 41 years ago on the floor. And if you're not familiar with what the PET-D is or does, it is one of my most powerful as well as popular tools. It's a color bar tool designed to confirm your entry signal. So it doesn't matter what strategy, what method, what system you're trading. If you get a buy signal, you want to see that bar colored green because it's a color bar tool. If it's a sell signal, you want to see that bar colored red. That's it. And that will mean you just had your signal confirmed. This means you have a higher level of consistency. At the same time, it will keep you in winning trades much longer. Once again, remember we've said that how many times you get out of a trade and it keeps going higher and higher and higher, or how many times you get out of a losing trade, or I should say a short trade where it goes down and then it keeps going lower and lower and keeps losing its value. And you're thinking, why did I get out so soon? Well, once again, this is not guaranteed, but if that's the type of trader you are, it can really help you in these different areas. Let me show you an example here. Here's ABMD, okay? The first thing is there was a strategy signal. This is one of our strategies that was generated. And as you can see, our platform takes all of this work out of it for you. Everything is generated. When a signal is generated, you see the green arrow. And if you want to apply all the different things, such as the 50-period moving average, which we call our buy-sell line, it's as simple as clicking on one of these green strategy tabs. Now, according to the questions and the structure we talked about earlier, it's okay to buy this because why? Well, we're above the 50-period moving average, which we call our buy-sell line. And we have a buy signal here that's generated by one of our strategies. So you're on the right side of the market. You have your stop down here, okay? But what if you just want a little bit more added assurance? What if you just want a little bit more confidence? That's where you click on the PET-D tool and you want to see if you're confirmed. And as you can see, automatically the colors are changed. All we're concerned about is the bar that generated the buy signal. It must be colored green. Now, as you can see here, since this is an up day, the outline is green. So this is a confirmation telling you it's okay to take this trade. You now have the added confidence to take this trade. Let's say we use the structure we talked about just a few minutes ago. Well, you would have exited right here at 362 because it's double your risk exposure. All right. So in a couple of weeks, guess what? You made over 55 points, 56.65 to be exact. Not a bad trade for a couple of weeks. We realize, you know, ABMD is an expensive $300 stock, but that's okay. You could have purchased calls. It's a very nice trade over nearly, 60 points in just about 2 weeks. But what if you really feel strongly that this is going to go higher? What if you think that this is just going to keep going and going? Well, here's what we suggest for people that are members of our PET-D course. All right. As you can see, all of the bars have continued to be green. Even when you have these down days right here, they were still green, telling you that these are just down days in a short-term uptrend. And they're actually buying opportunities. You want to buy when the market's down in an uptrend. So what we suggest, if you're this type of trader, is to sell a portion of your position using the structure we talked about, 2-to-1 risk-reward ratio, and then let the remaining portion position run. As long as the bars are green, you are staying in this position, okay, until you see the first red bar. Once you see that red bar, all you would do would place your stop just below it. And how far below is up to you. It could be a tick, it could be a point, it could be 5 points, but you want to have a stop underneath the first red bar. So you've sold a portion of your position right here. You want to have a stop underneath here, and guess what? Well, this chart was taken up to a couple of days ago, and at this point, you would still be in the trade with your remaining position, and now you've just added about another 55, 56 points to your profit, because the stock now is up 112, 113 points higher than where you first entered. So you see how beautiful this could have kept you in, and we're waiting for the next red bar, and that means we'll move our stop up. Let's look at another example here. This is to the downside. This is a weekly chart of GE. Now, let's say one of your strategies, this is one of ours, once again, this is an actual strategy of ours, generated a sell signal at 27.55. Let's say you bought the puts, or let's say you actually shorted the stock. Well, you're on the right side because we're below the buy-sell line, the 50-period moving average, so that's okay. But let's say you want a little bit more assurance that this is, going to be a high probable trade. Well, you click on the PET D up in the upper green strategy tab, and it automatically changes the colors. And we can see the majority of the colors have already been red. We had one green bar here, but all we're concerned about is the signal bar. If the signal bar is confirmed, in this case being red because we're a seller, then it's giving you that added assurance that this may be a high probable setup to go short. So you have your stop in place, you know where you're going to enter, you know how much you're willing to risk, so you would simply double that, and that means you would cover your short position at 21.65. Okay, so everything's taken care of. You can use the 50% level once again, and in just about 2 or 3 weeks, it gets down to your exit level and you have nearly a 6-point gain. Not a bad trade, okay? But guess what? Let's say you really think that this is going lower. Actually, that was a little bit longer because this is a weekly chart, so it was over maybe a period of some months or so. But that's okay. You've got a nice 6-point gain. Let's say that you think this is really going to go much lower. Your strategy, your economic indicators, whatever you're looking at is telling you that this stock is really headed lower. So what you could do is exit a portion of your short position and just continue to monitor the PET D. As long as the PET D is red, you are still short the trade. But the very first green bar you see, which is right here, that's where you're going to lower your stop and place it 1 tick above, 1 point above, 5 points above. It's entirely up to you, but your stop should be above that green bar. And then if you get stopped out, well, you're out of the trade. You captured a few more points. But in this case, look what happened. All right? So it kept you in the trade. Now we have another green bar that was generated here at the end of April. All right? So we place a stop just above there. So now we've moved it down, and coming into May last month, we would have been stopped out on GE on a weekly time frame. So instead of making just 6 points, we captured about 100% more of that. And so our total profit was 12.5 points. So do you see how the PET D can keep you in these trades that just continue to go either up or either down, because the red formula for red for down, green for up is keeping you in because it's listening to what the market wants to do. It's not based on anything fundamental. It's not based on moving averages. It's not based on anything you can think of. 101 people have tried to figure out what the PET D is based off of. It's a proprietary tool, but it really doesn't matter. What's most important is knowing how to apply it. And most people wouldn't even have thought of using the stop technique. But this is an extremely important thing we teach you in our courses. Now, for example, let's share with you this example in UPS, all right? This was another strategy buy signal generated by one of our setups here. And let's say you didn't use the 2-to-1 risk-reward ratio. You only use the PET D. Well, that's fine. Remember, we're not here to tell you how to trade. We're just giving you the information so that you can decide how you want. And let's say this trader just decided to stay in as long as the bars are green. And look what happened. We had our first red bar here. So this is where you would still place your stop just below that. And as you can see here, beginning of February, you would have been stopped out. Nice little profit here. You entered here, got stopped out here. But this is why the PET D is so important, because as we see, look what happened. The PET D knew well in advance that the trend was changing. So just by issuing one bar, it already told you that most likely we're going to be headed lower. This is where you might want to get out of your long position. This is the beauty of the PET D. It also can work for long-term positions. We know we have a lot of investors that are students of ours and members of our strategies and courses, and they like to use it for their long-term portfolio investments. So let's look at Facebook, going back to 2013. Let's say you were lucky enough to get into this when it was a $15 stock. Okay, well, as you can see here, it has been green the entire time. So you're just using the PET D to tell you when to and how long to stay in this position. Now in December of 2016, guess what? We had our first red bar. So you would do the same formula, the exact same method, place your stop below there, wherever you decided, And that will tell you whether you'll be out of the position or not. And as you can see, we all know what happened with Facebook. It continued to go up. So this kept us out, but we protected ourselves. And we continue to keep that stop in there until another one was formulated. And this happened this year in March, I believe. We had a down month here. This is a monthly chart of Facebook, by the way. We had a down month. We simply moved this stop up to here. And look what's happened. This is a recent chart of Facebook. So we're still in the investment just by looking at what the market is telling us. We're not concerned with what the earnings are on Facebook. We're not concerned with what some guy on TV is telling us what he thinks about Facebook. We're only concerned what the market is telling us. And on a monthly time frame, it's saying it's still okay to be long Facebook, and your stop should be right here. Trading is really simple. It's us, the traders, that make it more complicated than it has to be. And we've been sold a bill of goods that the things that are supposed to work really don't. That's why most traders fail. We're here, Pro Trader Strategies and myself, to really educate you so that you can, for the first time, become a consistent trader, regardless of what market, regardless of what time frame, regardless of what style you like to trade. So let's review. Here's what you learned today. Remember, we talked about the number one question you should never ask. And even though I'm sure the majority of you today are saying, well, I never say, that to myself. I have never said, what do I do now? But remember, if you are subscribing to a newsletter, if you are watching with bated breath every news announcement, every jobless claim, every earnings report, if you're going to a chat room or reading a blog every day to find out what they're doing, or if you're looking at every so-called expert on TV to find out and get some advice, you are basically telling the markets, I don't know what to do. You know better than I do, so what do I do? So even if you don't say those exact words, that's what you're telling the markets. And you should never do that. I haven't, listened to me. Watching some guys on TV talk about what they think the market is going to do would be similar to a doctor, an actual doctor, watching a General Hospital soap opera to find out what they do on the soap opera. I mean, it's silly. They're just actors. It's the same way with listening to other people or other things. You should make your own decisions. I have stopped looking at news. I've stopped listening to financial reports 40 years ago. And so if I'm still here, it's proof that you can do it without holding on to those things. So if you have the courage to let go, you can still be a consistent trader. You just cannot let someone make your decisions for you. So once you've found out, if you actually say that, you realize the only questions you should ever ask are these four. Before you even enter a trade, ask yourself, am I on the right side of the market? The simplest and easiest way, but the most powerful way to do that, and the most inexpensive way to do that, is by applying a 50-period moving average. If price is above, you should only be a buyer. If price is below, you should only be a seller. You can apply this to a tick chart or a monthly chart. It makes absolutely no difference. Then you go to question number 2. Where do I place my initial stop? All right. That's going to determine if you can even take the trade or not. Because if the stop is too great and you can't sleep at night with that much of a risk because you may lose, then don't take the trade. But if it is okay to take the trade, well, then you know how much you're willing to risk. This will go and determine question number 3. What is my profit target? The most basic way to exit is simply to make twice as much as what you want to risk. If you want to risk 2 points, you should make 4. If you want to risk 1 point, you should make 2. It's that simple. And then finally, how do I protect my profits? Because we're using a fixed exit in this particular method, once you get halfway there, you should start to think about protecting yourself. You can either sell a little of what your position or move your stop to unchanged. Either way, once you get half the distance to your exit, you should think about protecting yourself. And you can also, which I believe is the most strongest point of this educational presentation today, is increase your odds with the PET D. I use the PET D every day on a daily basis with my trading. I have been focusing mainly now on stock and futures trading, but it makes no difference what market or time frame. The PET D can be applied to all of them, any and all of them. So we have a great special for you today, a great special and a great offer. We're going to offer you the PET D tool. This is our proprietary tool. We call it the PET D. It stands for Primo Early Trend Detector. When I was first introduced to it some 41 years ago, we simply called it the formula. But with the help of high-speed computers and programmers, we've developed it into a proprietary color bar tool and renamed it so that we've taken all the hard work out of it for you. All you have to do is simply click on a button and it automatically appears. The colors of the bars will either be green or red, and you automatically know what the short-term trend is. So with the 50-period moving average, you know the overall trend. With the PET-D, you know the short-term trend. Now, we call this our roadmap for virtually any market. Okay, it includes the add-on. So if you have any type of platform such as TradeStation, Metastock, Sierra Charts, MT4, NinjaTrader, even Thinkorswim, we have ways to apply the add-on so that you can use this with those platforms or with those different ways of trading. It comes with 2 continuation trading techniques, also with 2 pullback trading techniques, and the trailing stop technique, all right, that we talked only briefly upon. Now, this is our roadmap for any market, but we're not just stopping here. We're also going to be throwing in a way to use our PTS Primo charts. Remember, all the examples you saw today were generated using our new platform, the educational portal that teaches traders how to trade the markets. Now, we're going to throw in 6 months of the platform along with your PET-D course for free. So everything is right there. The buy-sell line, the 50-period moving average, which comes with different features. Also, the PET-D color bars, where all you have to do is click on the green strategy tab and they automatically appear. And you get all of these things, including our enhanced buy-sell lines, 4 different ways to see the 50-period moving average, a top-bottom 25% tool that will also tell you the short-term trend. It comes with the signal scanners. You can scan for PET-D on a nightly basis. It also comes with over 90 technical indicators and live Bloomberg TV. We have a media page, so if you click on that, you can watch fundamental news if you're interested in doing that. This also comes with personalized tech support, so anytime you have an issue, a technical issue, we can solve that for you in a matter of moments. This is such a great offer. You're getting the roadmap for any market, the PET-D, along with 6 months free of the platform, and included in that comes mentoring correspondence. If for any reason you have a question, something doesn't make sense, or you just want to ask me about something about the market in terms of trading these techniques, you can email me and I'll get back to you ASAP. Now, this usually runs for close to $5,000. We're dropping the price down to $29.95. And remember, that includes 6 months free of the platform. That's about another roughly $600 or $700 included that we take off the price. And we realize that not everyone can come up with $29.95, so we're also including payment plans for a limited time only, though. So if you contact Pro Trader Strategies and say, listen, I can't come up with $29.95, can I structure some type of plan where I give you a small deposit now? They will be happy to work with you so that you can be up and running using the PET-D today. Here's how to contact Pro Trader Strategies and set up a payment plan if you'd like. You can email them at the email address. I would suggest calling them directly at 310-598-6677 because that way you can put together a payment plan. And I would suggest that's the way to go because you can be up and running right away. Or if you're interested in getting more information or ready to sign up for that great offer, click on the link below. And that's not a live link, but the live link is posted in the chat box. So if you go to the chat box in the far right-hand corner of the Go to Webinar column, there is a live link that's posted. You can click that on and it will automatically take you to the sign up info page. But once again, my suggestion is contact Pro Trader Strategies. There's absolutely no in any way obligation to purchase anything. We have trading consultants manning the phones right now. They would be happy to answer any more questions that you may have. And in terms of answering questions right now, I will answer questions that you have. I will open up the question and answer box. Some people are asking, what are the platforms that we can use this with if we're not going to be using the PTS Primo charting platform? Okay, you can use it for NinjaTrader, for Metastock, for Sierra Charts, MT4, TradeStation, and you can also use it, people are asking about Thinkorswim. You can also use it for Thinkorswim, but the way Thinkorswim is set up, they won't allow us or anyone else for that matter to actually post our proprietary tools on their platform. But they do allow us to use their data feed. So what they say is, listen, it's okay if you use our data feed for free. So what we do is we give you a free NinjaTrader platform with the PET-D and with our strategies included, and you can use the free data coming from Thinkorswim. And we take all this for you, take care of all this for you, so that all you have to do is simply contact our tech support, and it's usually done in a matter of seconds. They do everything for you. So it's a great way, if you do have Thinkorswim and you want to use that, you can apply it. Question, does this work on eSignal? You know what? The last I spoke with Pro Trader Strategies, since they handle all of this, they were talking about putting together something with eSignal. And for all I know, they probably have that already together. So I would give them a call or email them to find out if it works with e-signal or not. You know what? That's a great question, because I spoke to the head of Pro Trader Strategies about a month ago, and he told me they were exploring a deal together with e-signal. So that may be in the works, or maybe it's already completed. Another question, what time frame are you using for the color bar? Well, remember, the time frame doesn't matter. It can be any time frame. So if you're looking at daily bars, all that matters is that you know the proper way to apply the PET D. Now, I use it on tick charts. I also use it on daily bars and weekly bars. We have students that only use it on monthly bars because they're investors. We also have students that primarily use it on daily bars. It makes absolutely no difference. The PET D is a proprietarily fine-tuned trading tool that virtually listens to the market tick by tick, and with its proprietary formula comes up with a translation translating what the market wants to do. And it'll tell you if it wants to go higher or if it decided to go lower. So that's our job as traders, not to predict, not to determine how high or how low something will go. We just want to go with it. So if the market is telling us it wants to go higher, then we're buyers. So that's all it does. And it does this on a tick-by-tick basis, so it makes no difference what time frame you're applying it to. So if that's your question, you can use it for any time frame, any direction, and any market. We also have students that only use this on Bitcoin. And I know Bitcoin has been falling out of bed lately, but it's been generating some great signals, and it's been most of the bars have been red for a long time. So this is telling you that Bitcoin wants to go lower until it decides it's bottomed out, and then it will start generate some green bars, okay? You can also use this. I use this on currency pairs as well as forex, commodities and ETFs as well, okay? Okay, let's say the stock is 40 to 50% over the 50-period simple moving average. Do you draw the line somewhere? Well, once again, that's up to you. Now, we have strategies that are built on taking advantage of stocks that are far a point away from their 50-period moving average. We also have strategies that work better closer to their 50-period moving average. It's entirely up to you. Remember, as I stated in the opening statement, we're not here to trade for you. We're here to provide you with the tools and information. And you can ask some of the trading consultants what strategies may work well with being a further distance away from the 50. But at this point, it's going to be your decision, because I don't want to backtrack here, but some of the best signals are a far away, they are away from the 50-period moving average, meaning that we're just going to continue higher and higher. It's almost like we're in hyperspace. Or other times, it may be as if we're running out of gas, but that's why the PET D is so great, because it will tell you if it wants to change direction. So let's say you're above the 50-period moving average, and it's really well above the 50, all right? And you're starting to get that old feeling again, wow, maybe this is overbought. Well, the PET D will tell you if something is too high. There's no such thing as overbought or oversold if you've seen my webinars before. It's just what direction does the market want to go? So if the market starts to turn red by the PET D, well, then it's telling you it wants to change trends. So that's the only thing you should be focusing on, not how far away you are. I hope that answers your question, Si. Another question. I like the way you explained everything superb. Oh, you're more than welcome. Well, here's one of my pet peeves. When I was first starting out on the floor of the exchange, I had a bunch of traders trying to explain to me how the market works. And once again, everything was explained through interest rates. Everything was explained through economic conditions, and everything was explained through fundamental news. And I couldn't understand or make heads or tails out of anything the way they explained it. And then when I tried to apply it, well, it worked sometimes and it didn't work other times. So I decided if I ever got in a position to help or teach someone, I would make it as simple as possible. And I was lucky enough to have my mentors explain everything to me the exact same way I'm explaining to you. They explained it down to the common denominator. They said, this is what works. There's no consistency in these other things. So only focus on what works. I mean, why would you focus on things that don't have a high level of consistency? This is why we don't focus on support and resistance. This is why I don't focus on volume. This is why I don't focus on Fibonacci, because they're too subjective and there's not a high level of consistency there. We only like things that are cut and dry. If price is above the 50, you have a buyer's bias. If price is below, you have a seller's bias. It doesn't get any simpler than that. If the setup bar of your signal is green, great, it's confirmed to go long. If it's not green, then don't take the trade. It's that simple. Trading does not have to be more complicated. All right, it's the traders who have been trading for a relatively short time, 5 to 10 years, that have the most complicated of trading methods. All right, 10, 20, sometimes even 30 rules. But it's the traders who've been trading for 30, 40, 50 years who have the simplest of trading methods. Maybe 3 to 5 rules tops, maybe one indicator. That's the way all of our methods are designed at Specialist Trading Pro Trader Strategies. Extremely simple, 3 to 5 rules, 1 or 2 indicators tops, okay? Question, are you using the 50-day simple moving average on a daily chart? Yes, sometimes I am and sometimes I'm not. Remember, it's up to you. I don't want to give you an answer so that you can emulate, because that will turn it into a crutch. This is not a trading room or a chat room, because that's why we don't believe in those things, because what traders do is they say, well, what do you trade? How do your charts look? What do you look at? And all of a sudden, you're going back to that old question again by basically saying, what do you do? Because I don't know what to do. And we don't want to formulate that crutch with our traders. So it makes no difference if I'm using the 50 and only the PET D. It makes no difference if I use both. What makes a difference is that you're supplied with this information and then you decide how you like to trade. The great truth is that no two traders should ever trade alike. This is why we don't believe in a chat room. You shouldn't be emulating or mimicking someone else's trading technique. You should be given the same tools, but then you decide which one you want to use, which one you don't want to. Do you want to enter here? Would you like to enter at a lower place? Would you like to exit here? Would you like to use this exit point? So we have different variables for all of those different levels. And we mentor and work with you so that you can ultimately decide. So even though I may use the 50 or may not, it makes no difference, because the tools we are using have high levels of consistency. Whether you decide to couple them up with another one or not, you'll still have a higher level of consistency. Why? Because you are now a part of the process. Not me. I'm not trading for you. Not someone in a chat room and not someone on TV or not some news event, but you. You are deciding. That's the philosophy behind specialist trading, and that's what I've tried to instill. Hopefully I can, and did so today with you. Okay? Now, as we close here, I just want to say thank you for joining us, but please do yourself a favor. Take advantage of this great offer. I mean, 6 months of the platform free is a great offer in and of itself. I mean, we designed this to make it simple and to have everything one click away. 50-period moving average, the PET D, all the different tools, they are one click away. And if you're still on the fence, contact Pro Trader Strategies. There's absolutely no obligation. You can talk to one of their trading consultants. They're manning the phones. They would be happy to answer any question about the platform or about the PET D or any of our strategies that we may also have, okay? In closing, I thank you so much for attending today. Remember, the number one question, whether you say these exact words or not, is, what do I do now? So never get to that point, because that's basically would be no different than the brain surgeon saying, well, what do I do now? Or a lawyer saying in the middle of a trial, what do I do now? These are professionals that would never ask themselves that, but this is the way most traders trade. Every time you go to a chat room, every time you watch someone on TV, every time you wait with bated breath for a news announcement, you are telling the markets, what do I do now? At Specialist Trading Pro Trader Strategies, we try to remedy that by supplying you with the information so that you never have to ask that question. Thank you so much for attending. I wish you the best of luck. And remember to contact Pro Trader Strategies for any more information. And as you take one last look at our disclaimer, I wish you the best of luck, and I look forward to all of you becoming students and members of mine in the PET D course. Thank you so much. I'll see you next time. Bye-bye.